XDC Network is outperforming the broader crypto market not because of hype, but because real financial infrastructure is finally showing signs of change. While other cryptocurrencies buckle under inflation fears and leveraged liquidations, XDC surged over 8% to 0.03417, with trading volume spiking more than 35%. The catalyst: a growing conviction that blockchain could soon replace the outdated systems underpinning global trade finance, a $2.5 trillion gap that's been ignored for too long. The momentum built after XDC executives took the stage at Consensus Miami, where they laid out a clear vision: modernize trade finance using blockchain rails. But the real spark came from an interview between King Solomon and Travis John, head of institutional DeFi at XDC Network. John revealed that trade finance deals still involve up to 11 parties, banks, exporters, logistics firms, and rely on manual, paper-heavy processes that are slow and costly. XDC has been working since 2019 to digitize this ecosystem, but the game changer was its acquisition of Contour Network, a platform originally backed by over 100 financial institutions including Citi, HSBC, and Standard Chartered. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The important part isn't just the acquisition, it's what XDC did next. Contour was built to modernize trade finance but lacked stablecoin functionality. XDC integrated native USDC, and now between $60 million and $70 million in stablecoins are live on the network. That's not just liquidity, it's transactional utility. Combined with over $717 million in tokenized real-world assets already on-chain, and daily trade finance volume exceeding $100 million through Liqui, the ecosystem is demonstrating real throughput. Banks like Bank of America and JPMorgan are already acknowledging the need to upgrade their financial plumbing. The bigger challenge, as Travis John noted, is achieving network effects, getting all parties in a trade to use the same system. But XDC's membership in the International Trade and Forfeiture Association gives it rare credibility among Layer 1 blockchains targeting enterprise finance. It's not just building technology, it's aligning with institutions that set global standards. The ecosystem is also accelerating through technical and financial incentives. The V268 Cancun hard fork brought Ethereum-compatible upgrades and EIP 1559 fee burning, which introduces mild deflationary pressure as usage grows. A $10 million liquidity campaign is boosting DeFi platforms like Curve and XSwap, while partnerships with Archax, Republic, and Bitso Business expand access to institutional capital. Cross-chain integrations with Layer 0 and Stargate are connecting XDC assets to Ethereum and Polygon, making USDC on XDC more accessible than ever. Compliance is another pillar of the narrative. XDC has worked with Archax on MiCA-ready documentation and partnered with Crystal Blockchain for on-chain monitoring. Critical steps if US regulations clarify and open the door for institutional crypto products. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. All of this sets the stage for what happens next. ChatGPT outlined 3 potential paths for the XDC price based on institutional adoption. In the bullish case, if banks like Citi and JPMorgan integrate blockchain rails and XDC captures even a fraction of that flow, the price could reach 15 cents to 35 cents. The likely scenario, pilot programs and limited tokenized corridors, still pushes XDC into the 6 cents to 12 cents range. But if banks stick to private systems and speculative interest fades, the price could fall back to 0.015 to 3 cents. The real uncertainty is whether the technology works. It's whether legacy institutions will commit to public blockchains at scale. XDC has the partnerships, the infrastructure, and now, the attention. The next signal to watch is clear: actual transaction volume from enterprise users. If that grows, this isn't just another altcoin rally. It's the start of a structural shift in how global trade moves.